At Metropole TVKE across all your social media platforms. My name is Simba Elijah Charles Kiage. I am at Kiage Simba. Let's move on to that last issue that we have for you this morning, where a billboard in Nairobi by Yellow Card, a company promising to provide the easiest way to buy and sell Bitcoin, Ethereum and Tether, instantly excited Kenyans last week, sparking conversations online on where the country stood in the cryptocurrencies space. This is especially after the governor of the Central Bank of Kenya, CBK, Patrick Njoroge, doctor, indicated earlier in the year that the country's stance on cryptocurrencies remained unchanged. Now, the billboard coincided with the Central Bank of Kenya announcement or plans to launch a digital currency, with reports in the banking industry also indicating that Kenyan banks were issuing alerts that urged clients to desist from the practice of trading of cryptocurrencies. This even as reports indicate that Kenya is now ranked the #1 African country with the highest percentage of its population that holds cryptocurrency. Despite these reports and the data suggesting that Kenya had Africa's second largest peer-to-peer Bitcoin traded volumes in 2021, Njoroge appeared to suggest that his institution will not rush to make any new announcements concerning its stance on cryptos and other products. Now that is where we start from this morning. But just before we look at that, let's cross over and see exactly how Bitcoin has been performing in 2022. Indeed, we're still talking about the 40K level. We've stuck there, came back to around 37. But again, all the way to 16th Feb, we did actually close at the 40K level. Now, crossing over to exactly how the dollar has been performing against other bigger currencies in the country as well. You can see exactly where we are. We're talking about the monthly average, and that's what we're talking about this morning, because indeed, if we're talking about its performance against Bitcoin, then it's really way up there. Now, let me open this conversation with you, Alice. I mean, when you saw that billboard and the conversations that were accruing from majority of Kenyans now really getting to know what Bitcoin is and the fact that they could actually start trading Bitcoin easily. And then over this as a side, you have the Central Bank of Kenya saying, our stance on cryptos is well known. We're not into that. We're not going to speak about it right now. How do you react to that as well, Alice?
Well, I'll pose the same question you actually posed earlier. Yeah, it's actually contradicting information, right?
Yes.
Because if you do send a paper out in a request to actually get responses on a possibility of Kenya shilling central digital currency,
Yes.
I mean, we are already talking about digital assets and we're already talking about blockchain, right?
Yes.
This CBDCs, actually the way they work is that they are pegged to the national currency, yeah, that the central bank actually controls. This technology still stems from blockchain technology, which is the basis of the technology that Bitcoin actually is linked to, right?
Yes.
So instead of actually taking a really back step and saying that there's no clear regulation on Bitcoin, saying that you do not support it, I think it's very important to consider how to work on a proper regulatory framework for this system, which is actually what most of the countries that are working on central bank digital currencies are actually doing. Yeah?
Yes.
So I think it would be more, it would be a much better solution to work on a system that can ensure that both digital assets and also CBDCs can operate in a way that, synchronizes the entire system, as opposed to trying to strive for one side and, focusing on the other side when it comes to the CBDC.
Yes.
So, yeah, it's important to look at it from both directions.
That is the question. Alice, just before I let you go on that as well, I mean, if we look at this time when the Central Bank of Kenya had actually just spoken about, in fact, they spoke it at the start of this year. They said, well, our conversation on cryptos is well known. We're not going to go talk about that. Should we have anything to tell you, then indeed we're going to come and tell you that. Then just a couple of months later, it was almost a month, the news come up and saying, well, the Central Bank of Kenya is now piloting Central Bank of Kenya digital currency. Are we sensing that that is the direction that the Central Bank of Kenya wants to take, especially when we're talking about digital currencies? Is that where they're heading, as opposed to supporting crypto?
Well, it looks as though, I mean, that's the direction they're taking. And we actually saw a similar direction that Nigeria took also, yeah? Because
Yes.
Nigeria also released their CBDC a few months ago, yeah, sometime last year. It's the same direction they took, and they were apparently piloting the CBDC at that particular time and then ended up releasing it, yeah? But I think also it's actually important for the government to emulate what other states are actually doing in as far as other digital assets and other cryptocurrencies are concerned, yeah?
Yes.
Because if you look at how the system is operating currently, and what you have said is actually very true. Kenya is actually leading in as far as the trading, peer-to-peer volume trading and all that that is happening, yeah. And there's a very good reason as to why that is happening. There's a very good reason as to why the space is actually thriving right now, yeah. We have access to mobile money payments before, right?
Yes.
We have done mobile peer-to-peer payments via the M-Pesa system. So it's very easy for people to actually adjust to a peer-to-peer blockchain system. That's why we actually ended up leading, globally in as far as peer-to-peer trade volumes are concerned.
Yes.
The systems are actually correlated. So it's important for the government to actually look at this data, right? See how this data is actually helping, yeah, the people and of course the community and the traders, right? And try and find a way of balancing both, because at the end of it all, yeah, it's still a space that is thriving and is helping people grow, yeah, which is also helping the economy grow one or another. Yes.
Pretty much. I'll be coming back to you on that as well, because there's so many talking points around this earlier. David, let me also introduce you into this conversation this morning. I mean, David, when the Central Bank of Kenya is saying, wow, our conversation on crypto is well known, our stance on that is well known, we're not going to get into that now, and then they launch a digital currency that they're piloting in the economy, and compare that with the stats that we're reading for you this morning, that when it comes to peer-to-peer, Kenya is second in Africa when it comes to peer-to-peer trading. Should the Central Bank of Kenya follow where Kenyans are going? Because indeed, it looks as if Kenyans have decided we need to go crypto. So should they go to that conversation and introduce regulation, or concentrate on their digital currency, and that's that?
Yeah, I think that's a good question. And personally, I think sooner or later we are going to see regulation.
Yes.
It is going to happen because when you look at the number of Kenyans who are holding and trading cryptocurrencies, this number is only going to increase, and it keeps on increasing. Actually, on a per GDP level, Kenya actually leads globally when it comes to P2P crypto trading.
Yes.
So this is massive, and again, this is being fueled by what Alice just said: mobile money. I can also add remittances, which account for about 3% of the country's GDP also. And also, a depreciating Kenyan shilling as well is contributing to this growth. So there are quite a number of factors that seem to contribute to this growth, and these factors will only continue to provide fuel for crypto trading in Kenya.
Pretty much. Now, just before I cross over to Alice this morning, let me throw in a Justin to weigh in on this conversation as well. I mean, Justin, this morning, if you hear where we're coming from in terms of Kenyans being the leading globally, even when it comes to peer-to-peer trading. We're holding positions. 4.5 million Kenyans already have accounts in blockchain. Is the Central Bank of Kenya losing by not taking blockchain technology seriously in the country and introducing regulation, or it's the Kenyans who already own it losing, Justin?
First, I'd just like to say that us leading globally is just typical of Kenya, because when it comes to innovation and especially on internet platforms, we've always been very quick to adapt. So that's a very good thing, and it's something that has helped propel our economy. Now, in terms of the CBK, Central Bank of Kenya, and whether it's late to the party or not, I think not. It's very understandable for the regulator of the banking system to be very cautious, especially when it comes to currencies. Digital currencies are very, they are relatively new sort of idea introduced to the market.
Yes.
Of course, when I say new, it has been there for a couple of decades, or about a decade, granted, but at the same time, it's very new. Not many people understand it, even people who are tech savvy, not all of them understand what are the merits. A lot of people who are trading, at least based on my experience, are trading it so that they can gain some sort of returns, and not particularly in terms of cash payments. So CBK usually focuses on banking system, whereby banks provide cost of credit so that they can be able to develop the economy. They also provide a means of making payments. So as a CBK, when it looks at into those two things, and looks at how Bitcoins, digital currencies can be able to plug into this, it's very understandable for it to take a very cautious stance. In fact, my view on this is that finally we are seeing the CBK opening up to the idea, warming up to it. And by say warming up, we're not saying it's definitely going to introduce its own digital currencies. It at least has done the pilot. The paper it has released, a discussion paper. We are likely to see it release more discussion papers, because that's what it committed to. And with time, given the compelling factors such as many Kenyans taking up this type of digital currencies, then we may see the CBK getting involved fully. What I think overall is that may not happen as in the very immediate coming months, because even if you look at, for example, digital lending platforms, they have been there for a while, including there have been both positive and negative experiences. Despite a lot of complaints, CBK has been hesitant to join fully.
Yes.
I don't know if it's they don't want to overregulate, but only recently did they commit even in terms of regulation. So we may see the same with digital lending. May provide some sort of platform, maybe echoing what the World Bank, World Economic Forum has released, what Nigeria, China, all these other countries have released.
Yes.
But in terms of full-on regulation, it may take some time, and even introduction of digital currency, that may take even more time, especially if you look at some of the things that they mentioned, such as financial exclusion.
Yes.
You can't be a regulator and you introduce something that may exclude a huge portion of the country. So it's good. They're finally warming up to the idea, but it may take some time. So it's a wait and see approach at this point.
Pretty much. Alice, that's why I threw you in, and I want you to react to that particular submission by Justin. Justin is saying, it's a bit too early. Alice, do you think it's a bit too early when indeed international companies are realizing that indeed majority of Kenyans are in it, and the numbers are showing that this is a country that's already in it, going by the 4.5 million Kenyans already on board? Do you think it's a bit too early, Alice? And how should you be? 10 years, you like to think, is a long time for the Central Bank of Kenya to adopt some sort of a regulation. If indeed they wanted to get into it, could we be talking about the Central Bank of Kenya improving that regulation or fully adopting it now?
Okay, I would like to see it from this perspective. Yeah, what Justin said is actually very true. It's a very new technology. Yeah?
Yes.
And for the adoption to occur and sort of occur in a seamless way, a lot of collaboration needs to happen. Yeah. A lot of collaboration needs to happen between central banks, commercial banks, and of course, even if central bank currencies are coming in to solve remittance issues, there needs to be collaboration even between different jurisdictions in different countries, right?
Yes.
This is something that is definitely going to take a lot of time, right? It might be easier actually for other jurisdictions, for instance, the United States, Europe, UK, to actually be able to seamlessly add their CBDC into the economy because of the they have a currency that they transact with, and there's like the US dollar, right, is a currency that is transacted across multiple jurisdictions, right?
Yes.
So it's gonna be easy on that side to actually be able to pilot and roll out the CBDC. However, on our side, it's actually even more difficult, right? Because we have different currencies within different jurisdictions. There's a lot of forex exchange issues that need to be dealt with. Yeah, we need to have a proper plan. Like, are we going to have a central bank digital currency across multiple jurisdictions, or is it just going to be within the particular jurisdiction to actually be able to solve challenges from more of a user base perspective? Yeah.
Yes.
So there's a lot that needs to be looked at, and there's a lot of collaboration that needs to happen for this to actually be a successful project. So what Justin says is actually very true. It will take time, right? Because
Yes.
of those challenges that we are talking about. However, I feel that the fact that we are actually leading globally, right, in as far as peer-to-peer trading is concerned, should actually be something that should put CBK on track, be able to try and find ways to form a regulatory framework for starters for all asset space, yeah, as
Yes.
they also work together with the CBDC. Actually, regulating the digital asset for starters would end up forming a much more path of least resistance as opposed to deploying the CBDC. Looking at it from a technological perspective, and also the complications that are actually there when it comes to CBDC rollouts. Yeah, so it could be better for them to look at it that way,
Yes.
right? Because it's already forming a place where the economy can actually thrive, right? If they close attention to this space, actually, we let we are leading peer-to-peer trading volumes and something to really
Pretty much.
they can actually be on that.
Yes. Just to close this conversation, David, I also want to bring you into that conversation. I mean, now what is the likely impact then? I mean, with the entry of companies that have realized that majority of Kenyans are trading in Bitcoin and crypto into the country, meaning that what is the likely impact when you have these two conflicting scenarios where the Central Bank of Kenya is saying, hold on, we're not telling you to get into that. We are not considering that space yet. And companies that are coming to the country telling Kenyans, you need to get into this space. What is going to be the likely impact of that, Deb? What do you envision going to happen in the near future?
All right. So for me, what I see or how I look at this is it's actually related to what the CBK said in
Yes.
regards to the CBDC. They were very clear, and they said that they don't see a CBDC coming to offer retail payments.
Yes.
Mobile money has already solved that problem, so they don't see a CBDC really solving a problem that hasn't been solved by mobile money. So that means digital currencies, Bitcoin and others, still have a space, and again, also, even when you look at cross-border payments, it's still a big issue. The issue of cost, the issue of speed, and the issue of access as well. And these are some of the problems that cryptocurrencies solve. And I don't see current systems solving some of these problems anytime soon. And really, that's the gap that cryptocurrencies are solving. And recently, there was a study with some of these fintechs here in Kenya, where some pilot work has been done to show that cryptocurrencies and stablecoins really can help in terms of increasing financial inclusion. I think the report is coming out this week by Mercy Corps, showing that stablecoins and cryptocurrencies really can help enhance financial inclusion. So I don't see this reducing anytime soon. The global acceptance of cryptocurrencies is only increasing, and I don't see that changing again, even here in Kenya. I mean, companies like Yellow Card are just one of many companies that I know are trying to enter this market because they see a gap, they see a huge need for crypto. Yeah, so expect a lot of these companies to actually, try to enter this market, and maybe regulation would help. But even without regulation, I still see a lot of companies entering this market.
Pretty much. At this point, I'd like to say thank you very much to you, Justin, Alice, and David, for taking your time this morning to speak to us here at Metropole Television. Always do appreciate. Take them online. #BusinessIM. Already a lot of activity on that particular hashtag. And talk to us at Metropole TV Kenya across all your social media platforms as well. Good morning. My name is Simbalaji Charles Kiang.